Real Estate News Now with myself, Lane Kawoka, and Dean.
Hi.
So we are going to talk about the market stats and price of paradise, talking about financial health, and we're going to talk about quite a bit about different trends, such as the millennial trends and the baby boomers, and how that's affecting real estate prices today in Hawaii. Of course, we are not lawyers or practicing CPAs here, so of course consult your own team for that. But I'll introduce you Dean here. Dean's the resident realtor. You guys can reach him there at deanweta@gmail.com. And why don't you tell us what's been happening in the market lately, Dean?
Yep. So, yeah, this is an interesting July. First slide's so-so, but for median single-family prices and median condo prices, we see both sides going up. We got $789.5 for the median single-family and $429.5 for the median condo. Closed sales actually went down 2% at 330 closed sales for single-family, but it did jump up to 502 for the condos. Interestingly enough, days on market went down 13 days, and on the condos we saw it go up to 18 days. On the next few slides, I think is going to be the interesting stuff where we're it's showing kind of like a change, and this is kind of consistent with my discussions with other realtor counterparts as well as lenders and even appraisers, where when we're looking at new listings, we're seeing a uptrend in inventory coming on market. For single family, it does dip a little in June to 504, but then it jumps again up to 519 new listings. And on the condo townhouses, we also see a straight rise from May, 678 new listings to 742 in July. What I did was I also looked up 2017 new listing numbers for the months of July, and we can see that relative to last year, we do have more listings popping up, which is a very good sign for the buyers. It's been such a really strong seller's market that this kind of information it's kind of showing the change, hopefully a little bit more towards the buyers, giving the buyers a chance. So in the next slide, we see a little bit more of the trend upwards. So when you're looking at months in inventory, for the most part, if you're looking at from January to July, we're seeing months of inventory creeping up. So that's a good sign for, again, buyers.
And that's been kind of consistent what I've been seeing in like the mainland, like places like Seattle. Some rents are actually coming down, and then prices are kind of coming down too.
And
on
then
the high end.
And then the last few months we have seen on Oahu a lot of price reductions, things staying on market a little bit longer, and I think sellers have been kind of spoiled from the standpoint of a lot of times we have that first open house, and the sellers are expecting to be in contract by the next week with multiple offer situations. So I think things are shifting just a little bit, and not in still seller's market, don't get me wrong, but it's there's a little bit of a shift going on. So if we look at the next slide too, I think it will be similar and consistent when we're looking at active listings coming on. Similar from January up to July, we're seeing that upward tick in active listings. So and that's consistent too with this summer being the peak. So we're seeing it go up, and we'll see what happens over in August to see if how the numbers look, especially on the closed sales and days on market, which will be coming up in maybe a week or two. Next topic, what I was gonna talk about was just some articles we saw about Hawaii the price of paradise. So putting things in perspective, a lot of times in the way back when they used to talk about, how much do we need to retire? And a lot of the, financial advisors would say, maybe like $1 million. So using that as a benchmark, this wholebankingrates.com did a study and said, how long would $1 million last in various states? So what they did was they calculated the cost of living and how much they would think you would cost every year for expenses. So in Hawaii, with the assumption of 85,000 for annual expenses, it would last you 11.7, 12 years, right? So, I mean, realistically, if you had that $1 million and it lasts you 12 years, that's not much of a retirement fund to get you anywhere, especially with the the expected. I guess we live longer nowadays, right? So if we're retiring at 62, it's gonna take us to what, 74?
Yeah.
Not too bad.
It just takes like one Okinawan person to skew the data
Yep.
to live to like 100 years. Yeah.
Yep. All the people in the blue zones, right, that are gonna be outliving their $1 million retirement funds. But so it just gives us some perspective in terms of the price of paradise and just in general. I mean, the how long will our retirements that we're planning to last, right? So another article that I found is talking about this is in Hawaii News Now and Super.com. So it might give us a little bit more hope, maybe, saying that rents in Honolulu were 13th highest in the nation. So for a one bedroom in Honolulu is 1660 versus San Francisco, where you're talking 3500. So maybe Lane, this is goes to your point, right? Where maybe we don't buy and we rent and we take our income and we invest it in cash flow.
Yeah, and I think like those four cities. I mean, those are just pretty just out of the normal cities where you have just the computer programmers is the most popular or the most popular profession out there, and their salaries are 150,000 or greater at least. A lot of these guys, and that's why they can afford that. I mean, it's very the economy out there.
Yes, and I'm sure you saw it too when a lot of my friends, when they move back from the mainland, and like you're taking a lot of times you're taking a hit on the wages, but you have a higher cost of living when you come back to Hawaii, right?
Yeah, and there was like another one of those types of studies done with like what's the cost of like a dinner and movie date.
Mm-hmm.
And like they're saying like San Fran was like $250 a night, and then they had Hawaii at like $200 something a night. But I mean, that's kind of like, I mean, I don't know who spends $200 on like a dinner and movie.
Yeah.
Definitely not that brother who lives in $1,200 one bedroom apartment there in Honolulu.
Right.
Yeah.
Well, they also have like the Big Mac price, and I like to always look at the cost of the price of like a gallon of milk, and you compare that to the mainland, and it's just ridiculous, Like you could down here, what is a gallon of milk? Like $5, and this is like non-organic.
Yeah.
It's like half the price, and you can do like organic on the mainland, so you could raise your kids on organic for way cheaper than down here.
Yeah, and I think the thing that makes this all work in Hawaii is that I think we lead the nation by far of multiple generations living or multiple families living in one household.
Yeah.
That's where the scrunch happens, and I think probably could go a lot more. I'm thinking.
I mean, that's why they're pushing the ADUs to now, right? And trying to get that up to relieve us of our housing crisis that we're in right now. So
right.
That's the challenge that we have. So I guess the point of all that is it made thinking of those articles, it always makes us think of our true financial health. Sometimes we think I have a good paying job is an accountant, and but how much does your retirement actually get you? How far does it go? Especially with the increasing cost of healthcare, increasing cost of assisted living. Can't not unable to rely on Social Security, and just to survive. I think we have to have part-time jobs, have our side hustles. Always looking for multiple streams of income and passive cash flow, right? So I
Yeah,
think
but
we're on it.
not that creepy kind, right? Where the guy's like, "Hey, Dean, you want some cash flow, man? It's passive, not that weird kind,
Yeah,
scammy kind."
yeah, we've seen our share of those, Lane.
Yeah, but yeah, just buying, assets that produce income is the thing.
Right, right.
Yeah.
So, and I think we're both those kind of guys, not the sketchy ones, but the ones that are working hard with our side hustles. We have our day job, and trying to get multiple streams of income. So I
Yeah.
don't know, just something for everybody to keep in mind, and you know that's my piece.
All right. Thanks, Dean. Well,
Thank
for
you.
you guys that don't know me, I have this podcast, simplepassivecashflow.com, where you guys can check out, run some other companies here, and you guys can check out the book and get a free copy if you text ebook to 587-317-6099. But I'm going to kind of finish up today's presentation on different trends that are happening out there, kind of population trends, and we can kind of get a discussion going on with some of these. But, the millennials is the biggest generation. They're hitting the labor force since in 2016. Here's a little graph, and if you want to pause the video, you're seeing how the different generations are kind of, the baby boomers are kind of retiring these days. I mean, shoot, when I entered the workforce 10 years ago, they were like, oh, don't worry, the baby boomers will be gone in like 5 years, but they're still here. I think that 2008 thing kind of kept them around 10, 20 years longer, but it's actually finally starting to happen. They're actually leaving. And now you can go work for Dean. Yeah. I don't know where you kind of fall in this. You're probably a Gen X.
I'm a Gen X. Yeah, I'm a
Yeah.
Gen X.
Yeah.
42. Yeah.
So but it's changing. It's a sharing economy out there. You can see the rise of the Airbnbs, the Ubers. That's my car there. I crashed it last month. Someone hit me, but I didn't replace it because I live like 4 miles away from work, and I actually needed some more exercise. So I went and got that bike, the electric bike there, and I've been using that. And I've been using Uber because for me, time is more important. I can get work done while I'm Ubering somewhere. And what I figure is, like, if I spend $800 with car payment, gas, insurance, not even including the cost of my time, I mean, that's like $150, $200 a week that I can spend in Uber. And it's kind of hard to spend that much.
That's cool. Pretty innovative thinking from that standpoint.
It's different. It's different.
Yeah.
Right? I mean, do the math. The math will tell you.
Right. That's kind of cool.
And it's kind of hard to go play with your friends basketball and you got an Uber there for $20, but it makes sense at the end of the day. So here's a little slide on like what's the forecast for 2016 going into the future. So, basically the generations are kind of moving through the system, and in 2030, they're going to get a lot older. And like how Dean was mentioning, the rise of the ADUs, assisted living. If you're an assisted living operator, or other known as like old people houses, you are in the right place, my friend. That is a great real estate investment these days.
Yep. And you also, yeah, that's true. And you see those popping up on Oahu too a lot.
Yeah, I mean, something definitely I'm thinking about, although I do always look into all kinds of investments, but that one is for sure a no-brainer.
Yeah.
Origins of labor. America is very fortunate because we have a lot of immigrants. I don't really follow politics. I don't really understand what they're all talking about, immigration and what Trump and all those guys are doing. But nevertheless, they're coming, right? And that's kind of, America is one of the ever increasing population countries, unlike Japan. Of course, China's increasing their population too. Here is a chart of the home ownership rates. So, this kind of goes hand in hand with the sharing economy. It's becoming less and less financially doesn't really make sense to own a home. I mean, the question is there. I mean, for some people it makes sense, for other people it doesn't make sense. And the home ownership rates are kind of reflecting that. You see the peak there in 2005. I think when Bush went into office, Bush Jr., his big thing was to make all the financing programs so everybody could be a homeowner, which I don't really think is the right thing. And that was kind of the why that we kind of got into this mess in the first place, and why it kind of deleveraged in 2008.
Yeah, I think a lot of the children who saw their parents get burned by the subprime crisis, they kind of like are wary, right? I mean, plus the fact that some of them are in debt for college, but a lot of them see their how their parents got burned, or plus add on their debt from college, and the fact that the younger generations are wanting to move around and have that more of a, not to say transient life, but not settle down just yet. So all those things probably add to this drastic drop or trending down of home ownership rates, wouldn't you say?
Yeah, and I think you kind of glazed over like the whole student loan thing. I mean, I think when I went to college, I think 30-50 grand was kind of like the average, or within reason. But now these kids are graduating with 100-200 grand for just going to a 4-year school.
Yeah.
I mean, it's pretty ridiculous. I mean, I don't know what the payment on that per month is, but like it's got to be 2-3 grand a month, right? I mean, shoot, that's like half their salary.
Yeah, and those Fed loans, even if you claim bankruptcy, I don't think you can get relief from those. My understanding is
right. They're all recourse debt, follows you forever.
Yeah, crazy, man.
Although there's a little hack these days, I think what you might be able to do is like you can put it put it in something under your name, different, like you can put in like a LLC or something like that, and then claim bankruptcy. But yeah, I don't recommend that. That's kind of
for another podcast.
Yeah, for another podcast, another show. But anyway, household here, people aren't getting married because I mean, one of the drivers of that is having kids. And people are just getting delayed getting married. I think if you look here, 1980s, the average dude was getting married at 24.7, and the girl was getting married at 22 years old. Nowadays, that's like, guy is getting married at 30, the girl's getting married at 27.
Yeah. Any pressure on your side?
No, man, I can go on forever. I get better as I age. So the decline in marriage among the young, obviously like I said, it's getting less and less. And the average age of first child has gone from your parents' generation from 21.4 years old, and not too long ago, 25 years is when the average firstborn. The blue line here is the married households, so that's decreasing. Non-family household is increasing, and the unmarried family household is slightly increasing. Older wealthy Americans are realizing this, and they are becoming new renters as they are kind of seeing that this big house that they once had isn't really cutting it, and they're looking to get more of that high-rise building in downtown neighborhoods, or that that mixed use in what do they call them, not suburb, I guess suburban,
like the kind of like in Kakako, like our urban sprawl going on right now.
Right, those 3-4 story, they're walking distance from Whole Foods, that kind of lifestyle. And then everybody talks about the generation after the millennials, and they call them Generation Z. I don't know. Maybe you manage some of these guys at work, Dean. Some of these guys, I just kind of joke. I just ask them where they're going out this weekend, but they're talking about they're more oriented towards pragmatism and caution and personal security. These guys, they were born with computers, and with all the social media and mobiles and interactive in their daily lives. Their initial housing preferences are in urban centers around a lot of people. But unlike the millennials, it seems like this Generation Z, that which are like sort of very, very young, 0 to 10 or 15 years old right now, they have a little bit more desire to own home ownership, which kind of just, maybe it's just a demonstration of, things move back and forth, whatever your parents like, you don't like, and vice versa.
Yeah, sounds like everything goes in cycles,
Right. Everybody wants to live in the urban area, then everyone wants to go suburban, back and forth. I don't know about you, but at the end of the day, I don't like a commute where I sit in the car for an hour. That's what I care about.
Yeah, that's for another discussion for me.
Yeah. Do-it-yourself homeowner flipping shows. These Generation Z people seem to they kind of like them, but they're not tied to major markets. So, and in the workplace, Gen Zs seek out mentoring and hands-on management.
Interesting. One thing to mention, you asked me about that, is I don't know if you had any, but they're actually offering management courses, not for the Gen Zs yet, but like managing the millennials. So they have actual courses to make sure, you want to make sure you're investing in getting new hires that they stay for the long haul. So there's actually courses to how to keep them satisfied and for what they want, because the mindset is a lot different than the other generations. So I always thought that was kind of interesting.
Yeah, I think you and I are both kind of in the middle, right? Like I'm a late Gen X, early millennial, and I see that I see the young kids. They want autonomy. They like their jobs, but you just have to engage them.
Yeah.
But those baby boomers, man, they kind of just did it for the money, right? And they kind of expect everybody just to suck it up and do it.
Exactly. Yeah. I mean, that's for everything. That it's like everything, right? It's your marriage, it's your job, it's everything. Is you suck it up because you committed, so you're in for the long haul.
Yeah, your duty.
Yeah. Regardless how painful or bad it is. I mean, props to them, but every generation has their own principles and to go by.
Well, you can lead us into the next frontier there, Dean. And then, like I said, they're less tolerant for sharing than the millennials. So they kind of want that ownership back. So does that mean owning their own houses? Maybe. But I guess the tail of the tape is going to be still out. It's going to be another 20, 30 years till we find that out. But back to, today, right? So here is talking about that student debt we were talking about. And I don't know what school these guys were going to, but if you're in Hawaii and you're going to school in the mainland, I mean, it's $35,000 a year to go to UW or some California school.
Yeah.
Maybe even 40, I don't even know.
And my understanding too is like, especially the private universities and colleges, I mean, they're constantly going up and way higher than inflation rates. Yeah.
Yeah.
So it's hard to keep up, man.
I mean, I just think this is like the next bubble, the student bubble. I mean, it's just not even worth it going to school these days.
Yeah, to your point, if you look at the return on your investment, right? It's like, maybe look at going to a trade or something. Go to trade school or become a carpenter.
Yeah, go paint some of your rentals there in Kansas City. Education there.
Right.
So our friends at Zillow say that there's a record 30% of single adults, up from 21% in 2005, taking on roommates. So maybe they might make another friends sitcom. Uh, as rent has outpaced incomes, people are no longer living alone. Yeah, I guess it's fun to live with other friends, I guess.
Yeah. At that age, yeah, I could see that. Or I mean, even that. I'm thinking of like the whole house hacking thing. I mean, that's if I was young like you, I'd be house hacking.
Yeah, I don't know. I think after the age 27, it's kind of like getting a little too old for that. But you got to start somehow. If not, you're going
Yeah.
to be financially
Yeah.
dependent the rest of your life.
Yep. Yep.
Um, yeah, I don't know if I don't know if the people have ever heard of that term, but maybe you can explain that for folks and maybe how you've seen it done in Hawaii here.
Yeah. I mean, so house hacking basically is you buy a multi-unit or you buy a single family individual unit and you split it up. So you can either rent out to other roommates, or if it's two separate units or multi units, you rent out the others. And the benefits of that is that you can potentially still have a residential Fannie Freddie loan for owner at the owner occupant rates, and basically have uh, others helping to pay for your mortgage, right, as they're paying you rent. So it's a
Yeah.
great way to start and get ahead. Now with ADUs getting approved, then that makes things more possible. A little bit challenging in Hawaii, but still a great way. I mean, I guess I shouldn't say challenging, but just to find a place that would have that potential would be the challenge, I guess. Yeah, but
Yeah.
I
Well,
think
if it wasn't a little bit tough, then everybody would be doing it, and then it wouldn't be
yeah,
such
yeah,
a great thing to do. And
right,
of course, this is none of this is legal advice, but
right,
you got to kind of watch out. Doing that house hacking thing. You can't have like a house with 8 people coming in and out, renting a room. I don't know if that's legal, but be smart
yeah,
about it. But hey,
yeah,
you got
yeah.
to do what you got to do.
Exactly, exactly. A lot of that monster houses have been in the news recently, right? Those big, huge houses that I'm assuming they're gonna try to do like some major Airbnb stuff. But to your point, yeah, you gotta do with it what's legal, but at the same time, to your point, do what you gotta do to get ahead, right? Especially in Hawaii, you talked about the high cost of living here.
Yeah, and that's the great thing about living in Hawaii. I mean, unlike the mainland, I mean, things move a lot slower out here. You're able to be a little bit more nimble and agile, and kind of meander the system a little bit. And regulators aren't kind of knocking on your door every second. So again, we're not giving you legal advice or telling you to go break the law, but one of the nice places, lucky live Hawaii.
Yeah.
So here's a little chart. Some cool things that not something you hear every day. I mean, you kind of, I think you like the stuff you guys have heard about baby boomers, but we know that they retire to mild climates, but what we didn't know perhaps is they continue to work due to financial necessity. So welcome to Walmart is a good example. If they do leave the suburban home that they had, they choose to relocate where their kids are, possibly the urban area core or the metro area. And when I was kind of studying assisted living facility, it's kind of funny. They don't care where their kids are; they care where the grandkids are, because
Mm.
a lot of them
That,
could care less where the kids live for some
that,
reason.
that, that makes sense though, right? Because the parents are gonna go visit their grandkids, right?
Right, right. And Hawaii's different too. I mean, in the mainland, a lot of kids they're not expected to take care of the parents in old age. Here,
Mm.
back in the East, you are, and Hawaii's that weird mesh in the middle. Who knows what the normal is here?
Yeah, yeah.
And then the Gen Xers, bigger houses in the suburbs and steadily climbing up the corporate ladder. This is you, Dean. This is you in like 5 to 10 years.
hmm
But what we didn't know is that they're rocked by the global financial crisis, leading to lower rates of home ownership. And I think the smart ones like yourself are focusing more on work-life balance.
Yep.
And unfortunately, some of these guys will be less financially ready for retirement than previous generations. The millennials, yeah, they're all sharing everything and nobody likes to own everything. But maybe what we didn't know is they're increasingly forming households now and having kids finally and moving out of their mother's basements. So they're looking at select suburbs and secondary markets for quality of life and cost. So I don't know. What would you say, like the kids who are in their early 30s who are finally growing up? Where do you see them going these days?
You mean locally or on the mainland? I think
Yeah, I guess locally. Yeah.
it's a mix because I know some are actually some like the mama's boys are actually going, trying to buy townhouses close to home, and then you have the others that are trying to get out to Kaka'ako and take advantage of those subsidized housing for this, especially the singles, right? Because if you're single, then and those subsidized housing coming up, I mean, it's pretty easy to qualify because the cost of living is so high. So I see a lot of the millennials moving into like the 801 Souths or um, the ones that are making really good, trying to get into Ali's, but
Yeah.
they're going to the urban areas, like you said, to be 5 minutes away from
Yeah.
the Whole Foods. So
Yeah. And those are getting tougher and tougher because I was trying to get somebody to apply for that one, all those low income stuff, but like man, like they really closed up all the loopholes. You can't. I think before you could hire somebody on Craigslist to go stand in line for you
right,
to
right,
close
right.
that one, and then now there's so many proof of documents you need to show, which is
Yeah,
good,
yeah.
right? I mean that's
It's good. Yeah, yeah,
that's
yeah.
the intent, but
Yeah. Well, even like I think one thing that they really tied up, which they didn't that first time around, was like the definition of a first time homeowner. I think initially it was like if you didn't own within the past 3 years, you would still be considered that. So they I think they tied that one up pretty quickly and for good reason. So I mean, Mr. Kaoko there getting into one of those units, I'd be like, hey man.
yeah, well, but that's the thing, right? Like the people who are in the know,
Yeah.
they get ahead. I mean,
Right. That's a good point. Yeah.
yeah. So these Gen Zers, the guys who are kind of coming up behind the millennials, they're tech savvy and converge on the urban core. But we don't know what that's going to lead and how that's going to impact everything. Um, so what's the impact on passive buy and hold real estate investing? Baby boomers, they were loyal to their companies, like you mentioned. Student debt levels getting higher. Everybody's getting married later. Weddings are super expensive now. Singles are buying pre-marriage, buying houses pre-marriage.
Yep.
Moving around, you want to be able, to be competitive in this job market. You got to be able to move around. I mean, it's kind of funny when company is saying they're moving from Kaka'ako to Pearl City and everyone whines and complains. Man, that doesn't happen on the mainland. It's like, well, go find another job, if you don't like
Yep.
it here, move.
Yep. Yep. Yep.
So you got to be agile. I mean, a lot of like people that kind of work around me in my cohort, it's like 1 to 3 years is a long time to work at a company.
Mm-hmm. Yeah, so interesting how things change, and that might give us landlords a better advantage, right? If all these things seem to be spelling out to like more renters, yeah.
Right, right. So the millennials are showing job and income increases, moving out their parents' basements and household formation. So I think the regardless whether it's you can be on the side of renting is better, buying is better, or being a landlord is better. I think regardless, population is increasing, and demand overall for housing is something you can't really deny.
Yep.
But hope you guys enjoyed our discussion today. My email is lane@simplepassivecashflow, and there's Dean's. And what are you up to this month, Dean? In the month of September already?
So my side hustle on the real estate side has been kind of jamming, fortunately for me. So I've been fortunate to be in escrow for four places at this time, four transactions. So that's been keeping me pretty busy. Besides that, always I'm still constantly looking for my next passive investment, both here and in the mainland. So
And that's what
I'm
Kansas City you're gonna head to next month or October?
yeah, October. I hope to check out a duplex that I purchased earlier this year, and trying to look for new deal flow. Seems like things are getting even tighter, so those margins are being squeezed, and those cap rates are being squeezed. So it's having hard time finding deal flow, but still searching both like in the mainland and here. How about you, Lane?
I am closing up a mobile home park that we're buying in Moberly, Missouri, next to your Kansas City there.
Cool.
And then working on another apartment building in Huntsville.
Okay.
It's kind of a smaller one, like a 49 unit, but I'm gonna do some traveling coming up. So I'm gonna go to Birmingham, Huntsville, Georgia, DC, New York, San
Oh, cool.
Francisco, LA, and Las Vegas. So
That's for training or more potential syndication deals?
more deals, more meeting investors out there. So just kind of making the rounds. I didn't have enough time to go to Moberly,
Oh,
unfortunately.
cool. Yeah. Well, like as we discussed too, and maybe this is later, but yeah, I'm hoping to get into some syndications too in the near future. So keep me apprised. I'm subscribed to your information anyway. So
Yeah, and I subscribe to your YouTube channel, Dean.
thank you, Lane.
All right. Well, thanks for guys for listening. And if you guys got any suggestions, questions, or topics, there is go to the YouTube channel and type it in there, or shoot us an email. And thanks, guys. Bye.
Thank you. Bye.